When trading the markets, it's important to have a strategy, but of equal importance is the psychology behind that trading strategy. Let's talk now to Ron William, who joins us, who we've spoken to you before, Ron, about trading, about the technical analysis, about the strategy of how to approach a trade. Explain where you sit along the path between the actual action and the psychology and the thought behind the processes involved in being a successful trader.
Well, in this new year, I'm actually focusing more on this subject with the product Intensichi. And as part of that, one of the key phrases that we have learnt through the work of Dr. Van Tharp, a trading psychologist, is that people trade their beliefs, not the markets. And the best way of explaining that is through this iceberg metaphor made famous by Freudian analysis from way back when. And that is the top part of the iceberg is never representative of the entire iceberg. There's always more underneath the water. And that's very much how we trade as traders. So in percentage terms, it's 80-20. I think most people agree with that. So 80% of why we do what we do is related to the subconscious, our values, perceptions, habits, beliefs and fears, and actually only 20% is mechanic specific. So if we think about logical behavior, risk management, which is key, but still part of the logical side of things, and even the trade strategy itself. The issue is we often treat knowledge as everything, and this can, while it's important, too much of it can lead to analysis paralysis. And so this becomes an issue for a lot of traders in the market.
So the point is here is that rather than the 80-20, it's important to get a balance between the three things that you've got here, mind, body and the emotional balance.
Yes, and that balance is a peak performance, really, in all of those three areas. Often we just think about the strategy side of things or the left brain areas, but it is a combination. Think of it as a three-legged stool: the mind, the body, and the emotional balance. And the center point of all of these 3 points is the trading zone that we often talk about.
Going back to the iceberg picture again, and the 80% of what we don't see, the values, the perceptions, the habits, the beliefs and the fears, some of that, if not all of that, is all about training your approach, your mind as much as anything. And I go on to the second slide. You talk there about the brain science and mental strategies. Explain more about the brain and how it should be used to fully support the trading activity.
Well, the simplest way of explaining this is in the words of a gentleman called Dr. Joe Dispenza, who studies brain science and has published much on the subject. He has often said that our personality is our personal reality. The problem is that not only do we not realize that, but we also think that the way that we are born is what we're stuck with. Our biography is our destiny, and that is not true. Our IQ and our personality is just the home base that we can work around. And the most important part is actually being self-aware of that, of ourselves, and also understanding this first slide here, which scientists call neuroplasticity. That's the buzzword in the brain science world, which basically means your brain is a muscle, and it can be trained as such. And so we either use it or lose it. For the most part, we're not actively conditioning it. And one of the simplest ways that traders can condition it is by using mental strategies across any behavioral trait that they might be challenged by.
Yes. How does the loss aversion, the negative, fit into this? So you've got that on this slide as well, the loss aversion.
Well, through self-awareness, what's key is actually analyzing each of the behavioral traits that we all experience when we're trading the markets. One of the top ones, it's no surprise to the audience, is loss aversion. We hate losing money, and that's understandable. The issue is what happens when we do. And often this leads to a negative spiral of frustration, anger, and often denial and excuitis, i.e. the condition of making excuses on everything outside of you.
It's always someone else's fault. It's always some extraneous involvement in a trade which takes it to the wrong direction. You know?
Yes, yes, and on face value it might be because of that trade strategy or because of that tip that our friend gave us or whatever. But the reality is that we need to take, and this is the positive mental strategy that I would recommend, responsibility. But that's a two-part mental strategy. In order to do that, we have to respond. We have to be more self-aware of what we're doing in order to know what to change. And then ultimately, the responsibility part is when we're actually being accountable to any mistakes that we're taking. And let's face it, mistakes does cost money. So as much as we look at risk and reward, the mistakes that we do also is a cost factor in the trade that we must be accountable to.
Yeah. How important is body fitness and wellness? This is the third slide that you brought along. Now, when you're sitting at a terminal and you're going through your trades, you're focused on what's happening. We don't often have an awful lot of time to get up and do things outside of what we're doing, and that is trading.
I'd say it's an excuse that we all like to make, including me. And if there's one thing that has really made a big difference for me, it's being healthy as much as possible. Now, if I know most people maybe don't have time to be in that peak athlete state, but at least if we can pick on that archetype and just realize that we do need to do something different and something more disciplined in order to get better and stronger results, as a lot of successful traders do, then that is something that we must model. And that's a big part of what I do, model the top traders and then teach others how to do the same. And so body fitness is everything to the top traders out there. And for the simple thing is, it's obviously most important for the operating system outside of the platform that we use, and that is our own body. It's the most important piece of the equation. It helps with our energy levels, it helps with our focus, and ultimately it helps us sustain the very trades that we do.
And as you say here, diet is all part of that.
Yes, well, diet is a precarious area. We all know it's important, but we all have our own personal traits in terms of what we like and what we don't like, and it's a debatable area. But the simple point is, in the analysis that I've made with traders, there's a lot of high stimulant diets in the program. So a lot of sugar, a lot of caffeine, and processed food, you know, takeaway lunches and whatnot, eating at the desk. It's a great short-term way to kind of get on with the day and with the trade, but not sustainable. And think about what that does for our energy. So if you're feeling tired and not really clear-minded, that is partly down to the diet and the exercise, but more the diet.
Yeah. Going back to what I was saying about the fact we're in front of a screen, we're looking at our trades, and quite often as a day trader you are deeply involved in your trades. The calming exercise, now this is something I find very difficult, and I'm not sure if I actually spend much time of my day doing calming exercises. What are you talking about here particularly?
It's anything that relaxes the brain-body state, and I mean, I think popularly that would be things like meditation or yoga for those who are open to that. These are two areas that I take actively on a daily basis, but it can just be a relaxing moment with the family, or just doing some kind of calming sport during the day. But whatever it is, it needs to be something regular that calms the body. It needs to take the brain from what we call a beta state, which is the problem-solving state, to the theta stage, where you can actually be more creative and be more calming, and ultimately be more aware of your thoughts, because this is where we start to kind of empty out the noise of the day, which we always accumulate in life, but particularly when we're trading. So it's very important. I don't call it mindfulness, I call it mind emptiness. It's really important to actually filter out the daily noise. Which
brings us on to the last chart, which you say is emotional balance. This is the incoherence against the coherence. How do you separate out those two? What is it you're talking about here in terms of emotional balance? What do you need to balance against each other?
Well, essentially it's how we feel. How we feel actually does signal our biochemistry. It actually does transform the body for better and for worse. And it's not just the brain, which we seem to be fixated about these days. It's actually the brain and the heart. They do communicate with each other. And what scientists call a frustrated, angry state is an incoherent state. And what's important for people to know and recognize about an incoherent state, other than it's a volatile, noisy wave, what that means is it actually incapacitates our brain and our logical thinking, what we call the neocortex. The very thing that allows us to make logical, objective decisions actually gets paralyzed. So we're going to likely make really crazy and costly mistakes if we don't balance our emotions. And of course, the common time that we're out of balance is when potentially we're fearful of a trade, we're losing money. I'm not saying that we should all of a sudden be grateful for the loss of money, but just try and moderate the emotional reaction and also be aware of what it is that we're feeling and why.
It's easy to monitor the heart rate, but how can you monitor that balance, the emotional coherence, if you like?
Well, it's often been a grey area, but the best and easiest way is just to have a trading diary. It doesn't take that much time or effort just to do that. Once you start, it's something that can be continued forevermore. But essentially, follow the trading rules, follow the trading strategy, but ultimately have some kind of a journal, open journal, in terms of how you are reacting to each of the trades, whether you're making money or losing money or somewhere in between, because that's a great way that you can follow not just the price pattern, but your actual emotional pattern. And ultimately, the market is fueled by emotions.
And that emotional chart you've got on here, points of maximum financial risk, how does that work out through someone's day?
Well, in the words of Jesse Livermore, you know, many things will change, but human nature does not. And that's because, and this is what fuels the market through all the cycles. And so at the top of the cycle, we have, you know, excitement and euphoria, and that's where we get the greater fool theory of the last buyer buying, only for it to turn into a price vacuum and the market then cliff drops, to despondency when we hate the market because so many people didn't do well in it, and yet that's the best opportunity time to actually go in. So it's an interesting contrarian signal in a market top and bottom, but between those 2 points within the market cycle itself, human emotions is key. And what I often try and tell traders is study the pattern, trade the pattern, but avoid becoming the pattern.
Yeah. As a big picture overview on this, is this for day traders only, or is this for longer term traders as well?
This is across the board. This is for all those who want to live a healthy life, but more so if they want to trade or invest. Trading or investing is a metaphor for self-awareness and for self-transformation. And it's key, really, just to be that successful trader in order to get those good results.
Okay, a trading psychology with trading strategy. Thanks indeed for joining us, Ron. Ron William from Intensichi, taking another look at how we should go about our day as traders. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.